Hello, traders. Good morning. Welcome to the live wave webinar where we look not only at waves, but price swings, price patterns, moving averages, fibs, and fractals, and analyzing basically chart patterns in general. My name is Chris Svorcik from Elite Currency, and thank you for joining this live session. And later on, of course, we'll upload it to YouTube. So I hope that, first of all, that the viewers that commented on my euro dollar, pound dollar analysis video that I do bi-weekly on the 31st of March to the 2nd of April are here. I really appreciate the comments they made because from feedback, I think I get ideas to interact with you and I have to explain my vision. And sometimes my vision is off as well. And I learn from that process. So I really like chats. I really like messages showing what you think about what I did, what you think. And I think this interaction is always great. So definitely encourage all kind of chats here in this live webinar and constructive chats, of course, below the YouTube videos as well. So, the comments from last week from Jane and Raim, sorry, um, Alberto, led me to this topic. So I wanted to discuss analyzing price path in general and how I see it, basically, right? And sometimes I could be right, and sometimes I'll be wrong, and that's just very logical. That happens to everyone. Of course, the key is to uh, try to be more right than wrong. Obviously, that helps, and of course, more importantly, perhaps, is to make more profitable trades when you're right, and preferably actually avoid trading at all when you're wrong, and that is to a certain degree possible by using invalidation and confirmation. So let's dive into that. First of all, I will dive into the comments made by the YouTube watchers, Jane and Alberto. And once again, I actually appreciate their feedback. It was constructive feedback. They didn't agree with my analysis, but that's okay. And I actually appreciate them reaching out to me. So how I see it, basically, there are. I see the chart when I look at a price chart, any chart. I see probabilities everywhere. This is really ingrained in me already. So the problem is that to a certain degree, I already mentioned this already last month in March, is that because I see probabilities everywhere, the analysis sometimes that I do on your dollar pound dollar can get confusing for some viewers, maybe specifically for those that are watching the first, second, or third time. They might think that I don't have any clear opinion. In some cases, I don't because I see probabilities everywhere, which means that it's never 100%, right? And sometimes it's very close to 50-50. So, yeah, that does happen to me. And I think that traders out there who have a very dominant, clear kind of view might attract more viewers. But I have a feeling some at least out there are just having a very strong opinion because strong opinions catch a lot of views, right? Ultimately, it's kind of like an attention catcher. If you don't have a strong view, it's not going to create that much attention. So this is, I think, something that not only in trading, but happens probably in all fields. Overconfidence just to get attention, right? I don't know. That's what my opinion, at least. And so my analysis is more based on probabilities. That's the first point. Now, why was I so confident last week when the euro dollar was falling towards 117.50, 117? I was expecting a bounce. And I expected maybe to bounce too soon because my zone was 117, 117.50, but I was already a bit hesitant around 117.80 because I was getting close to it. So I was like, okay, is it already bouncing, right? And even before, actually, right? Actually, before that support zone. So we'll discuss those two instances on the live chart. For the moment, I want to just discuss the decision zone. So, usually speaking, I wait for price to react at a decision zone, to either break or bounce, to confirm or invalidate what I'm thinking. In this particular case, I had a strong upside bias. I had a strong, I had a strong preference for a bullish bounce around 117, 117.50, maybe an 80-20, or maybe even a 90-10. It was a very clear kind of view on that. And the people who disagreed voiced their opinion on that, right, in the comments. And reason was, and I mentioned that already before, was multiple things, and I'll explain on the chart later on. But for me, that was an 80-20, let's say, or 90-10. So for a bounce, 80% that it bounces, 20% that it would break through that zone. Now that bounce can bounce in various ways. It can bounce a little bit, or it can bounce more. So of course, there's always a chance that the bounce could be small. Maybe in this case, I could maybe attach out of those 80%, a 20% chance that there would be only a small bounce, and a 60% chance out of that 80, right? So this 80 is further divided into percentages, whether it's going to move up a lot or just a little bit, right? So let's say 20 out of 80, 20 divided by 80 is 25%, 60 divided by 80 is 75%, so 75% of a stronger bounce. I said 118.50. So that was my confidence level, plus minus, maybe even more. I'm doing this after the fact. I don't know what I would have said pre-fact at the time of the video. I don't know, but just an estimate, right? Now, it hasn't reached 118.50 yet, but that said, we are getting quite a big correction. So this, let's say here at 117.80, this level here could have been another decision zone. So as it keeps breaking these minor decision zones, the price is confirming the bigger upside, right? So you have smaller and bigger decision zones, and as the price reacts to those, we can kind of estimate, the probabilities of every step along the way. So that's how I see it. And once it gets to 118.50, there's a bigger chance, maybe even a 50% chance for price to bounce back down, actually, right? Or maybe even 50%. And at 119.50/120, I would increase maybe to 80% bounce chance. So as you get into decision zones that are stronger, I think it's easier to attach a higher probability that price is going to bounce or break when you get into a stronger zone. Or bounce in a stronger zone. In a weaker zone, you might attach a higher probability of a breakout, actually. So decision zones are where the probabilities are skewed higher, right? Whereas in the if price is in the middle of nowhere, it could be 50-50, whether price moves up or down. There's not much edge. The second important thing, how I assess probabilities, is with patterns, and of course, patterns includes Fibonacci moving averages, fractals, price patterns, wave patterns, chart patterns, time patterns, to assess whether price is moving as expected. So if we got the bounce here at the decision zone, if price is moving in an ABC up, then a small correction is becoming more likely. If price moves in a five waves up, then a bigger correction up is more likely, or even an uptrend perhaps. So patterns, this is a wave pattern example. So this ABC is making it more likely that price will maybe not move up that much. So this is how we can continuously assess the probabilities and adjust them when needed, and at the right time, not too soon, not too late. And that's a tricky balance, not to do that too fast or too slow. But eventually, of course, these percentages we had in mind, or I had in mind for probabilities, will change. Sometimes price will move as expected. So analysis and forecast are correct, and hopefully I made some trades based on that. In some cases, the price will move into maybe be half correct, and sometimes it'll be off. And then I will attach new probabilities to the current price chart. And of course, these probabilities are going to be less accurate the further in the future. I don't even look at too far away into the future, because it's just more difficult to make any estimate that far. And that's a logical thing because of the fact that when you look too far in the future, there's too many things, too many changes that could happen that we're not aware of that could alter the probability. So therefore, it's just more difficult. All right. Let me close this. Let me open the chart. All right, so let's discuss this. When I made my video, I was very confident of a bullish bounce at 117 here. In general, first of all, let me show you the daily chart. I was quite confident that there would be some kind of bullish bounce here at the 38.2 fib. Now, I was a little bit early as I thought it could bounce here for an ABC. Part of that was these three bullish candles, correction, and then a bullish engulfing twin. And I suspected with these two bullish candles still anywhere in here that there was still a chance of a leg up like this, or like this. As I was leaning towards ABC finished, ABC, and a C finished here. So a bigger ABC pattern finished there. That was incorrect, as you can see. I gladly admit. I think that there's nothing wrong with admitting that, and in many cases, I do believe that my analysis is correct. So this one was an example of incorrect. And I expected this ABC to finish A, and then another ABC like this to take price up for C up in here, and then a 5-wave pattern down again, probably, or a 3-wave pattern down like this. Now that didn't happen. As you can see, price actually broke to the downside, and we got an extension of the wave C. So the good news for me is that, there we go. And I was looking for a bounce in here. The good news for me is that it moved about 50 to 70 pips from the bounce here. And from the breakout here, it moved about 80 to 100 pips, I guess. So there's, even though my analysis in the long run was wrong, because and price missed the targets I had in mind by quite a lot, there was still plenty of space to protect some profit, or at least go to break even, because price made a break here of this trend line. Wait, maybe it's not maybe that accurate. This trend line like this made a bounce at this fib, the 61, made a bounce at the 78, and there was still plenty of pips from the fibs at least, and even from the breakouts on the hourly chart. As you can see, this is the 1 hour breakout, and here's the 1 hour breakout as price closes above the 21 EMA low, high, excuse me. So even from the breakout of the 20 EMA, it's not as much, but 65 pips here and 43. Now, so there was time to react if I took the fib trades at 61 or 78 or the breakout trades, right? Worst case, very worst case, I have 2 losses because I didn't do any trade management. The trades went my way, but then went down. But the good news is that, which I didn't have personally, but worst case, it could happen, right? Losses are part of the game. Losses are part of trading. The good news for me is that as I recognize that if price does break through this trend line, and then later on this one, and breaks below the 21 EMA zone again here, right here, that we're breaking a bear flag and we should see a lower low. And that indicates reasons for taking bearish trades down to 117.50 and 117. And that's what happened. So any losses I made in here potentially could be compensated by trades to the downside, because in that case I then realized that the wave C is not finished. We'll probably see an extension of wave C, With that breakout, we're probably looking at a wave 1, 2, and then down for 3, like this, and then a wave 4 correction, which had an ABC zigzag, as you can see here, ABC, and that we're looking probably at wave 5 of C, right? 1, 2, 3, A, B, C for 4, and with the break, we're looking probably at a wave 5. In fact, this was probably wave 1, 2, 3, 4, 5. And what I failed to see was that this push up, although I expected the wave to C, was just a very short wave C. And that's sometimes tricky. Patterns don't play out exactly as you expect. You miss kind of one slight small detail, and that could throw you off. That made me bullish, whereas in fact the bullish pattern was already finished here, and we're already in a bearish pattern. Just one small detail. So, but this breakout gave me the opportunity for more gains. And here, price bottomed out very close to 117.50, 117.50, 117.60, I believe. So 64. So that made me hesitate, because is that wave 5 of C then finished? It is very close to the 38.2 fib. It's very close to the round level of 117.50. It's close enough for me to consider that to be a hit. So it's a question mark. So that's why I looked at the hourly chart, and I said, well, if we would really need a break above this resistance again for the second time, or if we do get a break below this double triple bottom here, then it's probably going to edge lower for one more lower low towards 117, 117, 117.25, maybe 117.50. That's what it did. It broke. This was a wave 4 of 5 of C, and it went down for another 1, 2, 3, 4, 5 waves of 5. So we had another, like this. Once again, this was wave 1, 2, 3, 4, 5, and we had 1, 2, 3, 4, 5 within 5. So we had a 5 of 5 of C at the 38.2 fib. So we had ABC pattern here. Once again, ABC. Within C, we had 1, 2, 3, 4, 5. Within 5, we had 1, 2, 3, 4, 5. Within 5, we had another 5. And all of that ended when price did get finally fully hit the 38.2 fib. And we have now 3 bullish candles with a high so far, a high getting up to 118.20, and clearly about 120 pip reaction to that 38.2 fib. And that's what I expected. Ultimately, I did expect the 38.2 fib bounce. So that did happen. Now, my main target, first target was 118.50. It hasn't reached that yet, but it's getting very close. I think there's an 80% chance of, or 90% chance of price really getting there soon. But even if it doesn't get there, I think that the bounce at the 38.2 fib can be considered correct. Any trades around this fib can be moved to break even, and nothing should be lost based on that analysis. So, of course, once again, analysis is one thing. The trades derived from the analysis is the second thing. So, when I was wrong with this, as I said, I could have maybe lost 1 or 2, but I should easily make that up with the downside. Here, too, I was neutral. I was waiting for a break or break up or break down. It broke down. So, again, reasons for trading to the downside. Those were profitable. Then I expected a bounce. So I said I'll put a fib. Not only do I expect a bounce, price showed a bounce here. 3 bullish candles. And I said there should be a pullback into 20-day. And that was also a winning potential. If you translate that into a trading idea, that analysis, an entry at the 50 fib with the stop loss below the bottom allows for a lot of profit potential at any of these fibs, even reaching the minus 161.8 fib recently here at 118.20, but not the main target at 118.50 or even 119.50 or even 120.25. Those targets have not been hit yet, but smaller targets have already. As you can see, it hit the minus 272 target after hitting the 61.8 fib. So 61.8 fib, minus 272 target, 78.6 fib, and then up to the minus 61.8 target. ABC pattern. Now, yesterday I was not that confident about this spot because it broke below this trend line. I was less confident. But I wasn't immediately bearish either. I said I needs to break through this support trend line, or it needs to break above this to really confirm up or down. I was neutral at that point, open to both up and downside break. I don't know how much the comments influenced me from the YouTube channel. Maybe I would have been more confident about upside. I don't know. It's difficult to say. But in any case, we got the break here with the 1 hour chart above the 20 MA. That confirmed it. And the 117.80 breakout, clear candle, 3 candles in a row, bullish pattern with 3 candles, momentum, break above the 20 MA, break above the trend line, bounce at the support trend line, ABC pattern. And also we can see what I failed to see in my video yesterday, actually, and again, a small detail, but important detail, was the 5-wave pattern finished 1, 2, 3, 4, 5. That's something I missed yesterday, and that should have given the edge to the upside when looking at this ABC pattern down again. And if you put the fib on this swing, the bounce at the 61.8 fib, pretty neat. So I should have given the advantage to the upside yesterday before the breakout. I failed to see that. So failing to see that is also a small error in my view. So should have leaned to the upside maybe already yesterday, in fact, due to the 5-wave pattern and 3-wave down. But in any case, managed to, with the analysis and trades, catch it at the breakout. Of the upside breakout, of course, the downside breakout we never had on the 4-hour chart. I was talking about a candle close below the 20 MA and then a break below the low, and not a break by 1 pips. Of course, you're always looking for a break that is more than just 2-3 pips. Bullish engulfing twins, bullish candle close on the 4-hour chart, again above the 20 MA. That's confirmation, and I use my SWAT indicators to spot that very simply with the blue candles, confirming this breakout here, 117.80, and price is on its way up. And that's why this morning, with my Eurodollar analysis, I was bullish because there was huge momentum here. And this is looking like a wave 1, 2, 3. Therefore, I expected, if anything, a light pullback, maybe back to the previous tops here or these tops, but most likely the 20 EMA low, 21 EMA zone. That's what happened. Price respecting the 21 EMA zone here at 118, 117.95, and bouncing up 20, 25 pips. So let's see if we get the breakout above these tops. But I suspect we will sooner or later, and we should see them move up to 118.50. That could be, it's still a zone where price might make a flag. But if it does make a flag, then it still looks good for upside up to higher targets like 119.50 and 120, 120.25. And we should see a follow through then to the upside. Now, 118.50 could provide some resistance just because if we put a fib from the entire downside now, it is a 23.6 fib. But overall, I think the reversal and bounce here at the 38.2 fib is working out as expected. It was my third attempt to be fair, to be fully transparent. That said, the first one, although it was incorrect, the actual trades based on the whole analysis should be, I guess, break even. Some losses to the upside, perhaps, but some wins to the downside. The second one was actually a win because, despite the fact that I was leaning up, it broke down, and that was the way of capturing that analysis. And the third one worked out actually because we did get the bounce. So one thing is analysis. The second is where do you put invalidation and confirmation, because that is really how you decide when to trade a bounce or break. And in some cases, if you're not sure, you can use that to stay out of trades or to wait for confirmation of some trades. So this has been the development basically here of the Eurodollar in the last weeks, and wanted to share you my vision and 2 cents of how the Eurodollar moved and how to analyze that really since beginning of March till now for about a month. I hope that these views and ideas kind of help you um, understand my videos better, understand my perspective and analysis, and hopefully it will help yours as well. Now to those comments. So a lot of what I just said is already in response to those comments. Um, Jane, for instance, indicated that I sound quite confident that there is a bullish reversal. Indeed, that's because of the 38 fib, and I think that I mean I wouldn't say that the reversal is yet confirmed. For a reversal to be confirmed, I would really want to see price above the 21 EMA zone. Only then I would consider that to be confirmed and correct. But I do think that we can all agree that there has been a decent bounce so far, at the very least. And Jane continues that it sounds to me. She says that you're very biased towards bullish and hoping that to happen. Yeah, that's always tricky with bias. Indeed, I think that we analysis always creates a certain bias. When you're in trades, it creates a certain bias, and to a certain degree, we need bias because it allows us to stay in trades, to take a trade, to stay in the trade, to stay to the target, to exit uh, as well at certain moments. So, because without bias, we would be maybe too neutral, looking at it with too much fear. And at certain points, of course, we're waiting for the moments where we think a certain movement has a higher probability. Those are the kind of setups we're waiting for. In some cases, I might be confident about a setup. In some other cases, you might be ones. We, of course, always have to trade the ones where we personally have confidence in. Um, and ignore the others. And of course, in the long run, we want to check and test how accurate that those confidence levels are. And of course, the more experience you have, generally, the better that should get. So in this case, yes, indeed, there were a lot of reasons for me to have such a high probability attached to this zone. Um, Maybe what I usually sort of said is wait for a bullish candlestick pattern to emerge, like this one here on the 31st of March. Reason why I was also that bullish was because already that pattern already had taken place, I think. No, it didn't. No, not yet. But we had bullish candles, these three bullish candles. So not only the zone, but the price reaction, these three bullish candles, was for me very important. Here too, these three bullish candles, very, very important. Even stronger, these three candles. I attach a lot to momentum, and these three-hour candles were really important for me to indicate that there's aggressive buying going on and some kind of larger retracement or maybe even reversals taking place. So that's why my analysis was so biased in the upside. That okay, but there are other things too, of course. The 38.2 fib, the divergence on the 4-hour chart, the divergence on the 1-hour chart. But those are and the quarter level of 117.50. But those are more like extra extra elements, extra supporting reasons. The price action on the 1-hour chart, I think, was the main driver for me to be that confident about that. And I wasn't sure if that was going to happen, but I think, um, as I said, it is at least we can agree there was some kind of bounce. I think that's a fair assessment so far. I wouldn't say reversal as yet, though. Depends on how far price will move here. I'm still bullish, even if it were to move down in this area. I expect to bounce anywhere in this zone as long as it stays above the trend line. I'm bullish, and as long as new bull flags appear, I remain bullish for the moment. All right. Anyhow, back to the comment. Then Jane talks about, yeah, I will not discuss that again. Talks about previous bullish analysis. So I discussed that already. Let's not go into that one more time. And then, so thanks, Jane, for your views. Uh, Alberto is saying that he's looking forward to my videos on Monday and Wednesday. So I'm happy to hear that. Let's see. Yeah, sometimes. I mean, sometimes it might happen that I remember incorrectly. To be honest, I mean, my memory is not what it used to be. So if in certain video I said this, I tried to remember my analysis from the last time and then try to see how it played out. It could happen that I remembered incorrectly or overstating something, you know. So I try to be as best as I can to remember what I said and whether that played out or not, or if I was right, or how much I was right, or how much I was wrong, right? So, yeah, that is certainly my memory. Certainly, sometimes doesn't work as I would like to, but I try my best. Sometimes the analysis changes, of course. So let's see. Let's see. With, I mean, the most clear example was this break, of course. That was a clear invalidation of my bullish wave C, and that indicated a clear kind of wave 5 of C down. So that's a great example of that. All right. So anyhow, I hope that attaching probabilities, um, to decision zones, understanding where those decision zones are, updating those probabilities based on price patterns, how price responds to moving averages, fibs, fractals, and what kind of price patterns it shows, impulse correction. Help me update those percentages, make those percentages, and ultimately try to choose the trades that have the best odds. That's how I see it. And at the current moment, I probably see 80% chance of a bounce, 20% chance of a break, and 70% out of 80% chance that it will get up to this 118.50. You know, so that's how I see it now. 80% chance of a bounce, 20% chance of a break, uh, 70 out of 80 to this target, and if a bear flag confirms it, then it should stay that way, and the breakout of that flag, another 90% chance of getting up to 119.50, right? So the breakout here, the breakout right away above 118.20, also possible, right? I don't know whether break or bounce. Um, that's difficult to say. I don't want to attach any probabilities. But if it does break, then I'd rather wait for the bull flag to emerge at 23.6 fib because it's so close to target, unless you're maybe scalping on a lower time frame here. I guess that's it, folks. Well, thank you so much for joining. Of course, if you join later on, you can take a look at the recording that will be available in about 5 to 10 minutes from now. You can click on the play button here in our webinar software, or just wait for it to be uploaded to YouTube. And once again, thank you for all those comments underneath the videos, and hope my videos help. The euro dollar pound dollar videos, and I hope this video explains those videos better. And wish everyone great trading. Cheers. Bye bye.